Good morning, everyone, and welcome to the Quantum Leap Futures Pre-Market Morning Leap. My name is Doug McKay, and I am the founder and head moderator of Quantum Leap Futures. Quantum Leap Futures get together each morning prior to the market in this live go-to to take a look at the market macro to micro, look at the structure of the market, what the auction has done, and then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. My contact information is quantumleapfutures@gmail.com. There's no website. There's no blog. This is we do this live morning session, then we do live trading and analysis during the course of the trading day. You'll need Skype, so send me a Skype request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, there's over 300 of them up on YouTube. Just do a search for Quantum Leap Futures, and if you like what I do, follow me on Twitter @crazy2. Okay, yesterday, our main hypothesis was to come down towards the 40-50 to 36 area, find buyers, and rotate up through and go hit that 57, possibly even 61.50. Our second hypothesis was to try the breakout, fail at the breakout somewhere around that 57 area, and then rotate down through to the 40-50 and possibly come back down into that 34 level. And Hypo 2 played out amazingly. It was a tough trading day. A lot of chop for most of the day, and finally hit target, and I got myself in trouble. At the end of the day, I started going long and got caught in this flush, and then I worked my way out of it in the Globex. All in all, we have a double distribution day. A lot of volume went off down here. We're currently trading back up in the 41. If we open up in this area right here, it's going to be pretty thin, and it's going to be fairly choppy. Once we get above the 42, it should be pretty clear sailing up into the 45, 75, 47 area, and possible continuation up. But we'll get into that in just 1 minute. I always like to start my day doing a basic candlestick chart and a 9 EMA and 20 SMA, looking where we are within the trends in the different time frames. Beautiful trend up. End of the year, we challenged it, took it back. Beginning of the year, we broke down in January and February. March, we took it back, and April so far we're holding, by this, by our bootstraps to stay above that 37.75 and put us back into a bullish year. This week is option expiration. This typically has a bullish sentiment on the week. 80% probability that we get a bullish week. So with our open of the week, we have 20.52.75, and we're below it right now. So the probabilities are to the upside. Taking a look at the weekly, you can see that we have had this strong weekly trend, and it's starting to weaken and go sideways right now. We do have this technical gap, but this could go sideways, and again, you have to go with the probability of a bullish week historically. But the trend is up on the weekly. On the daily, we've had this nice strong move up, and now we've come down and challenged the trend, and right now we're currently trying to get back above the 20 and the 9. The 20 is at 20.39.50, the 9 is at 2042. So above 2042, which is also the value area low from yesterday, we should get a continuation pattern up, at least into that 45, 47 area. On the intraday, the 4-hour, you can see that we've had this pattern the last 3 days where the RTX, our Globex session has taken us down, and our RTH session has taken us down, and our Globex session has taken up. RTH down, Globex up, RTH down, Globex up so far. So hopefully today will be a true turnaround Tuesday, and we reverse this pattern and move up. The change percentage of range price from yesterday's action was down at 20.29. We went to 29.25 last night, so that's the 50% retracement price of the percentage of range. So hopefully that means that today we'll get a upward trend. But you have to just trade what you see. Right now, on the 4-hour, we have a downward trend, and we've just failed to get above the 2042 level again. Going down to the 30-minute, more sideways consolidation, a little bit the bullish bias on this, and then as we move down into the 15-minute consolidation, and then the 5-minute, we've fallen back below the 9 and the 20. So I'm anticipating a pretty choppy open in where we're about to open. We do have a naked cross down here at 20.35.75. I just don't think we want to see those 35s again, because again, like I said yesterday in the pre-market session, that if we hit the 35s, we're likely not to find the buyers that we've been finding down there, and we're likely to go lower and towards that 27, and we got the 29 overnight. So just be careful. Let the market tell you what it's going to do today. Look at that's pretty strong sell-off right there. Do we have some news? I didn't think we had any scheduled news of any importance today. At 8:30 we had import prices. Expected 1.0 came in at 0.2. This is the right date. 2 o'clock we've got federal budget balance, and that's about the only news that we've got left. That's scheduled. We are in the beginning of earnings seasons. The earnings kicked off last night with Alcoa. So far today we've had 5 companies report, and lot of reduced growth, but for the most part it hasn't been terrible. But we're still not getting to the big ones. After the market, I'm sorry, these are the after market closes. Before the market closes, we've only had 3, and they both basically hit reduced growth pretty much on target. Just taking a look at the calendar for Tuesday. Tomorrow we've got for Wednesday tomorrow we've got 10 and 13, 26 and 17. Thursday should be the big day, I think. So let's take a look at the macro picture. Again, we're holding inside of this upper distribution, this balance zone that we were in for the last quarter of 2015 until we fell out in the beginning of January. The key support level is right here at the 2016. We do not want to see us get below 2016. That should give us a bigger move down into this 2006 75 and possibly dip down into the 19s. Right now we're trading in this balance area right here, the microcomposite VPOC, and I just want to bring another, I'm going to bring this all the way over here. Take a look at it. So 4050 is the overall for this whole area going from March 17th. It doesn't really give me all the information I want, so I'm going to bring this back here, and that gives me 51 in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 2 weeks. 20, 50, 150. So the key levels out of this are 57, 51. The 40, 50 obviously is the big one. And then the last 3 days, the sellers have been stepping in here at the 20, 47, 75. So that's going to be a key level if we come back up into that, if they can accept that price to be able to make the next move up into the 51 and continuation up towards that 61.50 and possibly the 72. We're currently going to open up in this distribution above the value area low from the last 5 days. We want to see us hold these 36s. We don't want to see them dipping down and taking out the gap close, because that's likely going to lead us to move back and take out that overnight low down at 29.25 and more likely come down into this 25. And then once we get down in here, I think the bears could get aggressive and push us down to test that 19 level again and that key support at 16. Once 16's gone, then I think we're going to see a bigger retrace down. If we can get back above the 42, a little bit of resistance at 43.50, but I think the key here is the 45.75 and the 47.50 area. And then if we can get above the 48.50, then I would look for them to come up into the 51. Let's take a look at the action overnight. You can see that we continued to move. The 35s did not hold like I suggested they would not, and we moved down into the 29.25. That is the change percentage of range target price. Beautiful FUBAR, Mr. Sneaky, last night that led this whole way up. If you would have taken this trade, the entry was on this bar, and you would have taken no heat the whole night. You could have rode that all the way up into the 41, 43 area. They got up to the 43. Buyers came in, rotated us back down through, and now we're testing the year open at 37.75. So right now, it's going to be a battle for the for bearish or bullish year, and we're currently trading just above the 24-hour VWAP. VPOC overnight is at 40.50. So if we move this over and start turning this, our overnight low is down at 29.25. Come on. Now our overnight high is 43. And our VPOC currently, it shouldn't shift, is at 2040, just below the MC VPOC. All right, our daily ATR target, or our daily ATR, I should say, is running, our 20-day is running 2141. We're compressing on the average true range right now. So our upside ATR target off of the low is only up here at 50.75, and off of our high of 43 is 2021. 2021.50. All right, and we have a double distribution from overnight. It's not really defined, but there is an LVN here at the 38, but the 37.75, the year open, is the beginning of this low volume node. So I'm going to be using the 37.75 as a trade level. We're currently going to open up inside of range but outside of value. So we're going to get an open auction out of range, in range, most likely. My anticipation, my main hypothesis is to open up, battle the year open, come down, close the gap, chop around, and then get an impulse move up into the 40-50, chop around, maybe a little bit of a pullback, and then continuation up through the 42.50 and towards the 45.75 naked depot and possible continuation. My secondary hypothesis is to chop around on the open, come up into the 40-50, try to get back into value, fail, and then come down and blow through the 34s and come all the way down, take out the overnight low, and come down into this 25 microcomposite VPOC and naked VPOC down here. So the levels I want to be trading is the 37.75, the 33.50. I'm going to get rid of this because I don't need it now. Open this more. So we had 33.50, and then you've got the 30.25 area is no longer going to be valid. Got the overnight low, then we have support coming in around 27. Below 27, you got 25, and then the 21 and 19 and 17 area are key support at 16, and below 16, I'm looking for move down into the 06.75. I don't think we're going to see that today. Hopefully, we won't see that today. To the upside, above the year open, look for them to come up and take out the 40-50 and move to test the 42 with the opening our overnight high up at 43. Above the 43s, I want to be long into the 45 and a move back into the mid and the upper distribution HVN, but I'm really targeting this 47.50. And then you've got the daily upside ATR, but if we get above here and accept this 47.50, I'm looking for 51.25. And then we've got the value area high up at 53.50, and then above that targeting 57. I'm going to actually use the 56.50, and then anything above yesterday's range, target the 60.25 and 61.50 and 63, with resistance coming in at 65, and above 65, that big target, the next big target above, which is up at that 69 and 71. Okay, so again, my main hypothesis is to chop around on the open, possibly come down and take out the gap and bounce off of this 33 area, 34 area. I really don't want to see them break below that. Then rotate back up through the 40-50 and into the 45 and 47 with possible continuation up. If we break the 34 as a alternate hypothesis, my third hypothesis, I'd be looking to break the 3350, come down to the 25 area, chop around, try to get back up into the 30 into the range and fail and take us down all the way down into this 19 and 17 area. So hypo 1 is a move down, hold the range, or just false breakout, and then rotate up through. Secondary hypothesis is a move up into the 40 or 45 level, chop around and fail, and come down through to the 25, 27 area. And then the third hypothesis is, come down, find buyers, come back up and fail at the range low, and then take us further down into the 19 and 17 area. So that's what I'm looking at. That's how I'm going to trade it. We're currently below the Keltner. Keltner's going sideways again. Our center Keltner line is 40. Our lower Keltner line is 34. There's their test of the gap fill and the range, and then a move above the Keltner center line takes us up into that 45 level. So trying to keep these sessions short. That's going to complete our pre-market plan. As always, trade well, trade safe, and we'll catch you on the flip side.